You hear that? What? I'm pushing out content for the algo. For the algo, it's a digital floaty. Hey, how's it going, guys? Back with another episode of Anything But ASIC. Gotta get it out. Gotta get out the content. All right. So, China's underground Bitcoin mining operations are thriving despite ban. Data shows. I'm gonna read some articles. As you see it up here, I got plenty of. I'm expanding my like I say, my news feed here. I got plenty of new news feed articles and plenty of things to look at. The news never stops. It's a 24-hour news cycle. There's so many journalists out there. All right, so China is back again as a key center for Bitcoin mining, despite the country's outright banning of the activity 1 year ago. Previously, China has been a major hub for Bitcoin mining, according to the statistics released by the Canberra Center for Alternative Finance. On Tuesday, May 17th, it has once again re-emerged as a key player, as reported by the South China Morning Post. Sorry about that. Traffic from China contributed about 20% of Bitcoin's overall hash rate from last September last year to January. In July, evidence revealed that activity had dropped to zero as a result of prohibition on mining enacted in May of last year. However, as per statistics, mining activity in China made a swift recovery last year after exhibiting almost no activity from China in August. The following month, it was back up to 22.3% of Bitcoin's hash rate, coming in just behind the United States, which is 27.7%. The Cambridge Bitcoin electricity consumption index, I didn't even know that was a thing, is something that the CCAF puts out on a regular basis and is compiled using the geological data supplied by partnering mining pools. The CCAF said in a statement, notably, the data strongly suggests that significant underground mining activity has formed in the country. Access to off-grid electricity and geologically scattered small-scale operations are among the major means used by underground miners to hide their operations from authorities and circumvent the ban. According to CCAF, the monetary slowdown may have been caused by miners moving underground, giving the sudden rebound in Chinese traffic. The center added, it's probable that the non-trivial share of Chinese miners quickly adapted to the new circumstances and continue operating covertly while hiding their tracks, using foreign proxy services to deflect attention and scrutiny. Miners in China also utilize virtual private networks to stretch out their operations and limit the amount of power they use from any one place. This ensures that the local power provider is unable to identify any unusual patterns in the miner's energy usage. Wow. Oh, China, you actually made Bitcoin somewhat decentralized. Oh, wow. Like it was supposed to be. Hey, Bitcoin has economic value, says Chinese court. Just last week, the Chinese High Court rules Bitcoin has economic value and is legally protected against interest. It is legally protected against interest remains in digital assets in the nation. Meanwhile, China's tech behemoths are displaying an increased level of curiosity in non-fungible tokens. Finally, the People's Bank of China, China's central bank, is continuing to test its central bank digital currency with yet another digital yuan giveaway, with residents receiving 15 million in digital yuan. How much yuan's been printed? Jeez. And that's it. Basically, the feds are watching. This is centralized movement going now. That's to sum that up. Well, the Chinese feds. Let's see. In other news, Central African Republic makes Bitcoin legal tender despite El Salvadorian failures. Let's see, I'm not going to read that one. I'm going to read this one. Bitcoin moves in lockstep with stock and digital gold collapses. If you invested in Bitcoin as a hedge against inflation, you might just be underwater right now. According to data from Glassnode, a crypto analytics firm, an estimated 4% of Bitcoin holders are in the red, as the world's largest cryptocurrency plunged to $30,000 per coin on Monday. The digital asset is down more than 50% from its all-time high in 2021. Well, it can't go forever. More strikingly, for those who have championed Bitcoin as a kind of digital gold that can weather bouts of high inflation, the cryptocurrency has moved particularly in the tandem with the broader stock market sell-off. Well, most of the investors who bought this are in the stock market, and it's still higher than where it was 2017. So I still expect it to maybe sag to 10 grand, just maybe. We might see that. Bitcoin price has played follow the leader with growth stocks since last January, but the correlation has tightened in recent weeks as the bear market has intensified. Now its 30-day correlation with tech-heavy Nasdaq index is at an all-time high. This suggests that Bitcoin is feeling the same pressure from tightening financial conditions as the rest of the stock market. As the Federal Reserve continues to raise its benchmark interest rates in full court press to curb rampant price increases across the country, financial conditions are tightening, which puts pressure on risk assets. And for better or worse, Bitcoin and Ethereum are treated as risk assets. Tom Dunleavy, a senior research analyst at research firm Messeri, told Cheddar. While some crypto enthusiasts have pushed back against the narrative that Bitcoin is just another risk asset in the past, many are coming to terms with the fact that Bitcoin may just be along for the ride for the latest round of financial turbulence. Many crypto enthusiasts and Bitcoiners in particular, like to believe the blockchain will supply the alternative financial reality when the world goes to hell, but it's clear that not yet the case, wrote Jeff John Roberts, executive editor of Decrypt, in a recent column. Crypto is a prone to microeconomic shocks as everything else. Bitcoin bull Mike Novogratz, CEO of Galaxy Digital, which is a heavy investor in the crypto space, also recognized the link between cryptocurrency and the stock market this week. Crypto probably trades correlated to the Nasdaq until it hits a new equilibrium, said Novogratz during an earnings call. My instinct is that some more damage to be done, and that will trade in a very choppy, volatile, and difficult market for at least the next few quarters before people are getting some sense of we're at an equilibrium. This is a far cry from Novogratz's comments during a blockchain conference back in March when he said that Bitcoin's primary use case was a hedge against real bad financial stewardship. Arcane Research said that the correlation stems from the institutionalization of Bitcoin, which bigger investors have placed Bitcoin into the same buckets as other riskier investments. Dunleavy said he's doubtful that institutional investors like pensions and hedge funds are already selling off their holdings. He points to more specific event playing out right now in the crypto spirit as the reason for the selling pressure. You do know Berkshire Hathaway has like a ridiculous amount of Bitcoin in two exchanges. I mean, like, we're just gonna gloss over that. I don't know. Tinfoil hat time. Over the weekend, algorithm-based stablecoin Terra broke its 1-to-1 peg with the US dollar, falling as low as 67 cents to shore up the peg, which is a whole reason stablecoins are able to function as they do. The Luna Foundation Guard, the nonprofit that backs Terra stablecoin, sold off a large chunk of its Bitcoin and other crypto holdings. Regardless of where the selling pressure is coming from, Bitcoin is clearly not behaving as an inflationary hedge in the short term, said Dunleavy. I don't think anyone seriously considers Bitcoin an inflation hedge in its current instantiation. He said, it's many things, and most of those things right now that are risk assets. The US dollar, meanwhile, is on a bull run as currency traders pump up the global reserve currency in anticipation for more Federal Reserve hikes. We can compare Bitcoin to gold right now. Let's look at the price of gold right now. I haven't looked it up in quite a while, but I'm pretty sure it's doing the same thing. Price of gold. Price of gold. So gold's supposed to be an inflationary hedge, but gold price, we look in the last 30 days, Oh, what's that? Ah, yeah, it fell and it kind of bounced. Yeah, same for silver probably. 30 days, it fell and it kind of bounced. You know why? Because large institutional investors are the ones that control this funding. They control the paper gold and silver. They also control the paper gold, Bitcoin, and Ethereum. So if they say they want it at 30,000, 20,000, 18,000, 21,000, it's going to be there, right? The Bitcoin didn't get to 60K plus off of your uh, mom and pop or just regular investors that had maybe a few million laying around. No, it got that way because big hedge funds came and invested. So to see it drop below down to 20 grand or sat to 10 grand where all the rest of the regular investors are that didn't sell, the actual individual investors, could be a possibility to scare out just a few weak hands. But that's my take on it. What do you guys think? With all these other countries trying to make Bitcoin legal tender, with Russia making um, was it buying barrels of oil in Bitcoin and gold, and it's skirting away from the U.S. dollar. Do you really think Bitcoin's gonna go anywhere? I don't think it is. Well, let me know what you guys think. I'll see you guys later.